Welcome to today's market report.
World equities markets reached new highs on Friday after a session-long climb, booking a week of solid gains following a strong US job reports. The dollar index slightly retreated in late trading as risk appetite improved and the stocks rallied. The moves came after US Labor Department jobs data rebounded in a reassuring sign for investors who had worried for months about how stocks could fare once the Federal Reserve began rolling back the 2020 COVID-19 pandemic-fueled stimulus. Non-farm payrolls increased by 531,000 jobs last month as the surge in COVID-19 infections over the summer subsided, offering more evidence that US economic activity was regaining momentum early in the fourth quarter. Global stocks have seen a series of records in recent weeks, bolstered by blockbuster earnings reports from the biggest US-listed companies. The dollar index rose as high as 94.634 after the jobs report, its highest level since 25th of September 2020. The currency strengthening to its highest level in more than a year offers the Fed more evidence that the economic recovery has regained momentum. If these numbers continue at this pace, we could probably see full employment at the end of first quarter. Crude prices rose more than 2% on Friday on renewed supply concerns after OPEC Plus producers rebuffed a US call to accelerate output increases even as demand nears pre-pandemic levels. Brent crude was up $2.14 at $82.68 per barrel. WTI gained $2.47 to $81.28 per barrel. Markets know that the release of strategic reverses can only have a temporary bearish effect on prompt prices and is not a lasting solution for an imbalance between supply and demand. The Dow Jones rose 0.56%, while the S&P 500 gained 0.37%. The Nasdaq added 0.2%. The Pan-European Stock 600 index rose 0.05%. The MSCI's gauge of stocks across the globe gained 0.17%. Friday's advances came even after the Fed announced on Wednesday that it would begin tapering its massive asset purchase program, though Fed Chair Jerome Powell said he was in no rush to hike borrowing costs. Even though it transpired as expected, it is a significant milestone. The direction of travel is now clearly towards policy normalization, while the Fed emphasized that tapering is not tightening. According to LGT, it was really expert communication and very well handled. US Treasury yields tumbled and curve flattened in choppy trading on Friday amid uncertainty. The benchmark 10-year yield, which fell to its lowest level since 24th of September at 1.436% and marked its biggest downward move since 19th of July, was last 7.4 basis points lower at 1.4496%. Trading shares of Chinese developer Kaisa Group Holdings Limited was suspended a day after the company said a subsidiary had missed a payment on wealth management product, the largest sign of a deepening liquidity crisis in the Chinese property sector. While investors were happy with the Fed's communications, some felt that they had been misdirected by policymakers at the BOE. The Bank of England's decision on Thursday not to lift the rock-bottom benchmark rates proved the biggest shock for markets and pushed sterling to its biggest one-day fall in more than 18 months by as much as 1.6% on the day. Sterling fell as much as 0.5% on Friday, hitting a fresh one-month low of 1.3425. It was last down 0.07%. Germany's 10-year bond yield looked set for its biggest weekly drop since June last year, down 15 basis points as central banks left policy rates unchanged. GBP/USD stages a comeback during the New York session after dipping as low as 134.11 on Friday. Positive US non-farm payroll reports initially struck the British pound, which collapsed 70 pips towards the daily low as investors dissect US job news. Global bond yields plunge, led by US Treasury yields, with the 10-year benchmark note down almost 7 basis points, sitting at 1.462%, undermining the US dollar prospects. The cable, which was licking its wound after the BOE held its interest rate unchanged, continued its slide during the last 2 days. Euro-dollar has been a surprising reversal after printing fresh annual lows under 115.20 in the session in wake of stronger US job data.
This is today's market news. Thanks for listening. We'll see you next time.